always enjoyed the yen. I did a post, and this is, I'll just show you this post quickly. This is a post I did on, I did this post in 2012 on Wednesday, the 14th of November, yeah? And I was talking about various other crap, but at the bottom I was talking about the yen. And I was talking about this setup here, and this is a pattern I've been watching for years as it formed. And as we were in this ridiculous situation when the yen was being touted as a flight safety currency, which, given the bankruptcy of the country that that's being borrowed,
give me a break. Sorry,
it was just a joke.
Yeah,
absolutely. So what I did was I called it here. I said the wedge was broken. We already had a head and shoulders. There was no need for a retest to the high. I said it was going down, and chances are we were starting a multi-year move. What's the most cost-effective way out to short the yen over a multi-year period? The target I was calling was, the target will be in the 107 area, but there's good reason to think here that we can see the full technical rising wedge target made at 80.55. So that brings us to today. The yen closed Friday at 80.44. So it's reached that target. It has done the full retracement of, hang on a second, that's the monthly chart. So I'll do this on the weekly chart. This is the rising wedge, this is the head and shoulders, and this is yen having made the target and made a marginal lower low below this. This could turn any time. We had a beautiful rising wedge on the way up, we've had a beautiful falling wedge on the way down. It hasn't broken up yet, and it may well fall to a lower level than this, but it could bounce at any time. And I think I'd be thinking of this sooner rather than later. We've got a lot of positive divergence here, Really, it's just waiting for the off. When I called it here, it very gratifyingly then collapsed. It was what was that? Yeah, by the end of the year, which was only about 7 weeks later, it was at 111. It then bottomed out short term at 96. And it was great. It's but I haven't actually been following the news. I haven't been paying any attention to the policies which are actually causing this collapse. Apparently, so we'll see. Would it have happened anyway? Who knows? Where we are now, though, yen is a buy. We are fairly close to a low. We should do at least a decent Fibonacci retracement. Will it go all the way back up to the high? I have no idea. What I would say is, on the way down, it had the help that Japan is a complete and utter disastrous, stinking mess. That's not necessarily going to be an advantage on the way up. Which is hard to say.
If I could add one thing to what you just said, Jack.
Yep.
The yen is by far the most manipulated currency in the world. So if you trade it, just keep that in mind. So, the central bank in Japan can come out at any time and do something to support that currency. So just, if you're trading the yen, it doesn't trade like other currencies, so just be careful.
And another point to note is that actually I'm viewing this upside down from most other people. I'm viewing this as this is JPY USD. Most people are looking at USD JPY, which is exactly the same chart but upside down.
I actually have that chart, by the way, so I can share that chart.
Yeah. Why do I chart it this way? Because I normally do. You look at Euro USD, not USD Euro. I look at GBP USD, not USD GBP. I look at CAD USD, not USD CAD. So I look at yen exactly the same way. I realise everyone else does it the opposite way. I'm not quite sure why that is. And honestly, I don't really care. The pattern's beautifully, and it's very easy to see the way I do it. So, that's the way I do it. I'd be looking more than likely on a breakup for a decent Fibonacci retracement. Normally we would get 38.2, 61.8 would be somewhere in this range, probably fairly close to one of these, and that's what I'd be looking for here. I'd be a bit surprised to see a full reversal in the absence of a major collapse in America. So this is a gorgeous chart. I'll have a stab at the longer term picture. Now this is actually a pattern which has been forming since 1985, and at the huge meeting when they decided to inflate the value of the yen and devalue the dollar. Now, obviously, that was extremely successful. And this is a distorted mirror in a way of that huge USD pattern I showed, sort of setup I showed, which is the one here. This is kind of bearish. There is an obvious target here, and that is at 72.77. Is it going to reach it? I don't know. We've got quite a lot of positive divergence here. It might be it's not going to make it, but we've gone well past the 50% fib retracement, and I'm talking about the whole move from 1983, 1982, at this low here at 36.04. I think we're doing a Fibonacci retracement of the entire move up, which was a rising wedge, and that rising wedge took 30 years to break down, in effect. It is a huge pattern. We're doing a Fibonacci retracement, and I would have thought we're going to see some pretty impressive support down here. We're not far close to this, not far away from the 72.77 target. We may go down and hit it. I've got some doubts just because the falling wedge looks pretty much cooked where it is. When it breaks the resistance trend line, again, it's that puts us in a bottoming process, and that limits the amount it's likely to go down afterwards. Exactly the same as it would be with oil. So we shall see. All right, great. Pass it over to you, Sam.
Okay.